Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Create the perfect relationship between you and your body. Treat your body with all your love, honor, gratitude, and respect. When you make it a goal to adore your body and accept yourself completely, you'll learn to have the perfect relationship with anyone else you are with. Market-wise, let's take a look at it out here. We had the Dow Industrials up 147, Nasdaq up 37, S&P's up 19, gold contract up $55, trading at $1,365 an ounce. Silver up $1.33, trading out at $23.11. Platinum up 41 bucks at $1,463 an ounce. Copper up 9 pennies at $3.31 a pound. Light sweet crude up $2.83 at $108.25 a barrel. Bonds up a point and 24 ticks, almost 2 points at 132.02. King dollar got smashed, down 975 ticks at 80.32. The euro up 155 at 135.14, and the yen down a penny at 98.04. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, so we are up 19 points. You did 750 million shares. Now, if I go over to the SPY, what you have is this, folks. It's going to get interesting here because I suspect what you're going to do is you're going to get a third gap, too. So, volume-wise, we had volume on the SPY today. We did 176 million. Now, here's the correlation, which is going to get really interesting here. Because when you take a look at this, I'll make both cases up here. I'll give you the bull case first. So the bull case goes, the last expansion and contraction go like this. Okay, so bring this baby up. Where am I? Okay, so I take this retracement. So if we go like this, this is what you have. I believe the chart is up in the den. Okay, so what you have is this. We did, if we take the low of June 24th, that was 155.73. We go up to the high of 170. So 155 to 170, you get actually $14. That's A to B, okay? You bring it down, we did a 50% retracement, that brings you to 163. And if you put that together, you get 177, A to B equals C to D. That's in a correlation, and it did take that swing point out with volume. So that's your bull scenario. You're at 173 right now. That's a 177 number. The bear scenario goes like this, that you will get a gap higher, and it's a 3-gap play. I'll go through that in a second. And the way a 3-bet gap play, folks, it will get me exhaustion gap. If the gap higher opens at that 177, that would be El Primo as you get. Okay, so that's on the bullish side. On the bearish side, what you have is our benchmark is still out there, is the 22nd of June. And the 22nd of June was the 169 level, bottom line. And that texture, when something is that close, you normally take the largest one, and that's 244 million. So you had 181 taken out 244. We go to the Dow Industrials. Okay, so you take out, looks like the Dow. What we have in the Dow is this. Dow is up 147 bucks. We are at 15,676. Bottom line, over everything. That's saying, hey, guess what? You can go higher. Nasdaq Composite. We take a look at the composite. What do you have with the composite? She has been higher. She does 37 bucks today. She does 1.8 billion. We look at the NDX 100, the 3 Qs. What you have inside the 3 Qs. She does 30 million shares, and she's higher. That means you can get higher. Now, let's go to gold. Okay, so gold goes to the moon out here today. Wide price spread, accelerated volume. But this is what you have. Now, from top to bottom, we went 1291 to 1364. Monster move. 73 bucks, even though gold is up only 54. Now, in that context, the equities had wide price spread, accelerated volume. The stocks did. Bottom line, they all did. This is the problem. in the gold market right now. And this is what I expect we'll get a test. And what it is that we actually have a higher volume low that took out that swing. So it's going to be interesting to see, okay, is something going to get a retracement going that we can actually go test the swing point one more time, meaning of the 1291. If we go over to the GLD, which trades at 10% of the price of gold, that had the wide price spread, accelerated volume, not as much as it has to get, but bottom line is at 24 million, and that's saying, hey, guess what? You can go right to the highs of 137. You go to some of the gold equities, and the moves were extraordinary. Rango Resources was up $5.59, wide price spread, accelerated volume, all of the above. Gold Corp, same deal. Bottom line, you have it right across the tape. Okay, so bonds, okay, check it out. Okay, this is going to be wild watching this whole thing shake out. 30-year bond did 456,000 contracts, up $1.25, and that sets up right now on the 30 is that it sets up, you're going to make a run up to the 139, and, we'll see how it handles the 139. We take a look at the 10-year, what we have with the 10-year out here, TYZ. So the 10-year right now, huge acceleration, 1.6 million contracts. 10-year right now is set up to get up into the 130 mark and 125. Now, it's going to be amazing about this, folks, is that the bond market itself from May came down and had one of the fastest acceleration in rate structures, meaning yield on the way up. And now I suspect what you're going to see is just the opposite. Right now, the yield on the 10-year is 2.6. Now, the low yield, we had gone from 1.6. That was the low that was generated out there. We had 1.6, and I'm not sure we hit 3. If we didn't hit 3, it was really close to it. Bottom line, you are going to see the interest rates stay low. What we have from the Fed is this. What you have with the Fed, okay, so the amazing part about, Bernanke's been saying this out here forever. Bottom line is that they're not going to pull back. They're talking now. This is pretty wild, actually, because let's see. Okay, so if we look at what they're looking at, they're not going to reduce their $85 billion pace of monthly bond buying. They are sticking to the aspect that they want to see unemployment under 6.5. Now, Bernanke's quote was way under. That's his quote today in the statement. Wants it way under, not just under. And inflation running at 2.5%. Okay, we're not even close to 2.5%, folks. Okay, so bottom line is that the bond buying is going to continue, and as I've said before, I don't even. I think when even they stop buying the mortgage-backed securities, that rates are still going to go down, because the fact of the matter is that the refinancing market has dried up. So there's, without even the Fed buying on a continual basis, what you have is that you have a situation that there's huge amounts of cash looking for a place to land. Inside the debt market, this is. That's what they're looking for. They're looking for something inside the debt market. Okay, so now let's go over and talk about what a three-gap play is. Okay, so a three-gap play goes like this, folks. We have the first gap that was generated out here. Let me put the SPY up. So your bulls are really going to like this, because this is how this works, which is a trip. So the three-gap play goes like this. Our first gap, and if we get a three-gap play, you'll see an exhaustion gap tomorrow morning. So this is how it goes. The first gap was generated on the 9th of September. Small gap. Second one, larger gap. The second gap was generated between the 13th and the 16th. We'll see where they get the third one. We get the third one, and what you'll get is this, is that you get an exhaustion gap. When you get an exhaustion gap, and we know what the number is, because an A to B equals C to D is about 177, and the SPY. I'll give you that on the SP in the cash. But what does happen? It goes to the top of the gap. You stay right there. We'll come back and we'll finish it off. This is Tom O'Brien. This is TFNN. Coming back, folks.